it comes to passive income, we believe that dividends are the best alternative. Passive income can be generated in a variety of ways, including owning real estate, writing and selling a book, or creating your own blog. When you can live off dividends from your investment portfolio, there's virtually nothing else that requires such little effort to maintain. Building upkeep, locating tenants, and evicting people when necessary are all part of owning rental property for the purpose of earning income from renters. There's a lot of work involved in creating loyal readership for your blogs or in licensing your own music. You have to make songs that people not only want to listen to, but also pay for. Dividends, on the other hand, are paid automatically into your brokerage or bank account on a monthly or quarterly basis. It's the simplest method to earn a living without lifting a finger, other than monitoring your portfolio once or twice a year. Other than that, I feel like it's the absolute true way of making passive income, even if you couldn't fully rely on dividends for a living. Having a little extra cash in your bank account could be the difference between staying in a job you loathe and finding the new one that you love. Work-life balance might mean the difference between being able to spend all your leisure time with your loved ones, or spending it on hobbies, or working part-time. The largest obstacle to living off dividends is the amount of money you have to invest. There are a ton of videos on YouTube claiming that you need at least $1 million saved up before you can retire early. Many financial and business websites have even worse tips for you to follow. In order to retire at 35 with a salary of $65,000 a year, according to an article on Business Insider, you will need at least $3.3 million in your stock portfolio. If you don't think you'll make it that long, you'll only need $2.8 million by 45. In order to retire at 65 and live off stocks till you're 90, they say that you need $1.6 million saved up for a monthly income of $65,000. Another article in the Globe and Mail states that if you want to earn $50,000 a year in dividends, you'll need to save up roughly $1.33 million. Or if you want $40,000 a year, you'll only need $1 million. $1 million in dividend stocks may seem like a lot of money, but let's face it, $40,000 per year at the age of 40 isn't exactly going to take you very far. As a result of reading all these articles and watching all of these YouTube videos, many individuals get disappointed since it appears that only the super rich can actually retire early in life. For the time being, though, I'd like to make a case to everyone that you don't have to put up $1 million or wait until you're 65 to be able to live comfortably off of dividends. When it comes to living off of dividends, how much do you really need? We'll examine various different sorts of assets and see how much we really need. For the purposes of this example, let's say you can get by on $4,000 a month, which, depending on your personal circumstances, may or may not be a lot. But a lot more is certainly required if you have 4 children and live in Los Angeles. However, if you reside in rural Tennessee and you can commit to a frugal lifestyle, you may survive on much less each month. Let's start with some of the most popular dividend growth investments, as these videos and articles all use them to determine when you may retire on dividends. We'll use Johnson & Johnson, which is probably the most well-known dividend stock. The company's stock is currently trading at $172.93 per share, according to Seeking Alpha. It now pays a dividend of $1.06 per share every quarter, with a yield of 2.45%. Taking $12,000 and dividing it by $1.06 gets us $11,320, which is what we need if we want $4,000 a month or $12,000 a quarter. We need to own this many shares of Johnson & Johnson's in order to earn $4,000 a month. If we purchase 11,320 shares at $172.93 per share, we would need to spend $1.95 million in order to live off dividends. Most people who are watching this video do not have the money or the ability to save this much money in their lifetimes. Consistently investing in the dividend growth approach will eventually allow you to live off your investment in Johnson & Johnson's. And the truth is that you won't need to put up $1.95 million in total to do so. Keep investing a reasonable amount each month and you'll be on the right track. You'll have a good nest egg to live off of if you just wait for 20 to 30 years for it to appreciate. While that's excellent, there are a few drawbacks to this method of investing. First and foremost, and most likely the most difficult part, is waiting. Because Johnson & Johnson barely yields 2.45%, assuming a stock can boost its dividend every year for decades, you'll have to wait a very long time to accumulate enough shares to live off of dividends. During that period, I've seen a lot of folks give up because they've lost motivation due to the lengthy nature of the procedure. To achieve this, it normally takes the majority of your professional life. This isn't a horrible way to invest. Stay the course and start early enough, and you'll end up with a nice nest egg. However, the time and money required to reap the rewards of early retirement and dividend income may make this a poor choice for most investors. It makes sense to look into higher yielding investment options if it's going to take a long time to save up enough money in equities like Johnson & Johnson. Real estate income is another popular stock, so let's take a look at that. This corporation is a real estate investment trust, or REIT, which is a business that owns income-producing real estate and is mandated by law to distribute 90% of its profits to shareholders in the form of dividends. In comparison to other consumer staples such as Coca-Cola and Procter & Gamble, it currently produces 3.95%. In addition, the dividend is paid monthly rather than quarterly. Property income pays 23.55 cents per share each month as of the moment, which will aid in our estimate. There's been an increase in their dividend for 95 consecutive quarters, according to their website. There are many reasons why an REIT, like real estate income, is considered a solid investment. This time, we'll take a more aggressive approach and focus on finding an investment with a particularly high dividend yield. We're talking about Altria. It is one of the world's largest cigarette manufacturers. It presently has a tremendous dividend yield of 7.27%. It has a quarterly dividend yield of 90 cents per share at the time of filming this video. You'll need roughly 13,334 shares of Altria to make $4,000 a month or $12,000 a quarter. You'd have to invest $660,433.02 at the current share price of $49.53 to earn $4,000 a month from it. Now, this amount is significantly more achievable for more people if you were to stay dedicated and keep investing in this stock and commit to reinvesting those dividends. As soon as you get started early enough, many people will be able to earn $4,000 a month in passive income. While this may sound like a simple issue, is it really a smart idea to invest so much money and rely on one stock for our financial security? This cannot be true, as it should be clear from the outset. I would never advise investing $500,000 in a single firm and relying solely on that company for your living expenses. Investment portfolio diversification is necessary to ensure that one of the holdings does not drastically reduce the payout. If Altria cuts their dividend at any point in the future, it will have a significant impact on your dividend income, thus your livelihood. This exact same thing happened with AT&T not long ago. Therefore, it makes sense to invest in a variety of businesses. The problem is that there aren't many company stocks with dividend yields comparable to Altria's. High yields are offered by some business development corporations and master limited partnerships, but these investments are inherently risky. So the question becomes, what exactly can people invest in that offer exceptionally high and oftentimes still growing dividends. Covered call ETFs, which offer excellent dividend yields, increasing distributions, and monthly dividends, are what we believe make for a good investment for people looking to live off dividends sooner. These are relatively newer kind of investment that haven't been around for too long, but they are growing significantly in popularity. It can be tough to understand possibilities if you aren't familiar with them. However, they employ a covered call investment technique in which the fund purchases a basket of stocks and then sells call options on those stocks. These options are sold every month, and the option premiums are passed on to investors in the form of dividends. As investors, we benefit from extremely high dividend yields. QYLD is the most popular covered call ETF with a current dividend yield of 11.80%. There are two additional covered call exchange-traded funds on the market that enjoy a lot of popularity. One example is JEPI, a stable investment vehicle that utilizes covered calls and also owns equity-linked notes. In addition, there is NUSI, which is an exchange-traded fund that employs covered calls and protective puts. This strategy aims to prevent the fund's value from falling by a substantial amount when the market is doing poorly. You can see that JEPI and NUSI have lower dividend yields than QYLD, but their long-term price appreciation makes up for this. This chart shows QYLD's share price performance relative to the other two companies. However, the dividend yield on QYLD is higher. Investing in covered call ETFs along with other stocks and living off the dividends is a lot more feasible than writing a best-selling book or making a ton of money from selling stock photos or jewelry on Etsy. Again, even if you can't achieve being able to completely live off of dividends, being able to earn an extra $1,000 or $2,000 every month can definitely pay for a lot of things in your life. We hope this video showed you that it is in fact possible to live off of dividends a lot easier in your life. These covered call ETFs have been a real game changer for people who want high dividends every single month. Check out the subreddit QYLD Gang, a community of investors who are placing their money into these ETFs in order to achieve financial freedom sooner. This strategy is more risky and will result in greater taxes than investing in consumer essentials. We believe as long as you can maintain your portfolio diversified and live off of dividends, the advantages outweigh the drawbacks. It doesn't matter if you want to invest in dividend stocks for growth or income. The most essential thing is to get started. When it comes to building a solid nest egg, the sooner you start investing in dividend stocks or ETFs, the better. That's all for today. What are your thoughts on investing in dividend stocks? Join the conversation in the comment section below. Please click the like and subscribe buttons if you enjoy the video. We'll see you in the next video.